Good afternoon, Strategy Vault members. This is James. Video number 4. We are continuing our educational series on building our chart, and we're doing it one instrument at a time to teach you how our chart works and the instruments and tools that we use. This is just another tool for the toolbox. So please stay tuned for our disclaimer, and I'll be right back. As with always, we have to advise you that we are not professional financial advisors. This is our disclaimer. You need to make sure that you understand that you can and will lose money trading the financial markets per the NFA, CTFC, and the SEC. You need to see this disclaimer every time that we attempt to teach you anything in reference to trading the markets. So take a few minutes, read that over, make sure that you totally understand it, and understand that past performance is not indicative of future performance. Okay. Enough said. Oh, hold on here. Just a second here. We're just going to continue right there. Okay, so enough said about the disclaimer. You guys, we're all adults here. We all understand that this is a very risky business, but also can be a very rewarding business. So what do you have in front of you? What this is the 9 EMA, or the 9 exponential moving average. And we love to use this on our charts, and actually we have a nickname for this EMA, and in reference to our trading, and we call it right in the 9. Why right in the 9? I'm going to show you. So in front of you, this is just the EMA. Now I'm going to go ahead and I'm going to add on candles. So let's just go ahead and open up our candles here, and there they are. Okay, so what I want you to see is in reference to the 9 EMA, when price, of course with other levels, comes and breaks the 9 EMA, we call it right in the 9. Why? Because price loves to ride the 9. As you can see, the wick pierced the 9, but it came back down, and that candle closed below the 9. And that candle closed right at the 9, right at the 9, the 9. So it has a tendency to, price has a tendency to ride the 9 EMA, the 9 exponential moving average. Okay? So as you can see, this is a good tool for your toolbox. You know if price doesn't break that 9, where it's headed. Okay, so right here, price tried to turn, got right to that 9. The wick came on through, but the price, that candle closed below the 9. Made another run at it, hit that 9, turned right back around, and came on down. So this is just another tool for your toolbox. Now, how do you use this 9 EMA in your trading? So how we use the 9 EMA is like I said, we watch it right here. We watch how price reacts when it gets up to the 9 EMA. Okay, as you can see, it takes a violent turn. Every time it comes back up, it shoves it right back down. So by watching the 9 EMA, so we use the 1-minute chart to time our entries. But if you look at the 9 EMA on the 5-minute chart, it allows you to stay in the trade longer by monitoring price action or reaction off of the 9 EMA. As you can see over here, when the bulls finally broke the 9 EMA, they rode it right on up. Now it came back down here. Okay, But as you can see, once price gets above that 9 EMA, it likes to ride it. Now, is this a foolproof method? No, nothing is. There is nothing that is for sure in the stock markets. But as you can see, it's another tool for your toolbox that allows you to monitor and adjust your trading. Okay, so look over here. As you can see, the bulls. Remember in the first video in reference to your Heikin-Ashi candles, if you remember what I told you, if you don't get a wick coming back the other way, which we did there, but it was a very small wick, that's a pretty good sign the price is going to continue to climb, or vice versa. Over here, no wick, right at the 9, comes on down, no wick back to the 9, no wick back to the 9, no wick back to the 9. Oh, and we did right here, we got a pretty good wick right through the 9. I'll bet it just shot through there. But the deal is on this is where price closed below the 9 and below the 9. No wick, no wick, no wick. We got a wick there. Shot back, bounced right off that 9. Okay, so like I said, the 9 EMA is just another tool for your toolbox. It allows us to monitor the trade and stay in the trade longer. So with that, make sure that you add that tool on your chart. It will help you tremendously. If you look up the 9 EMA in Google or anything else, you can see that this is an instrument that all the institutional traders use, which that's evident right in front of us as far as how price reacts off of it. So the institutional traders, they have the big accounts, they trade the big money. And what moves the market or stops the market from moving is big money and big accounts. So make sure you add this to your toolbox. This is good. This has helped us numerous times in trades. And if you have any questions, please contact us. This is James with Strategy Vault. Thank you. Trade positive and God bless.